So what are you guys' goals for 2022? Have you set some goals for you and the team?
Yeah, so I want to close 200 million at least. 220 million would be preferred, which would be doubling what we're doing now.
Nice.
So, kind of some things that we're doing is we're reaching out to different HR departments. We got into some health centers basically here with 8,000 plus employees. So just some things that we're trying to kind of branch out more than just, business partners. We're trying to reach out to the community now, trying to figure out how can we show the community what we have to offer and what we do on a bigger level.
Right.
So I feel like that's how we're going to get to that 200 plus million.
Yeah.
We've acquired some products on the back end once we close that provide your clients with an incredible amount of value in order to help them build generational wealth. It allows us to communicate with that buyer at a much higher level and more frequently throughout the closed process, throughout the after process. And that allows us to do a couple of things. One, keep in touch with the buyer, see if there are any other people that he or she can refer us to if we've done a good job, and we believe we would. And that way we can sort of give back to you as well, because now we have a completely qualified friend of that buyer that we're bringing back to you. But the program itself just builds so much. There's just so many things baked in.
Yeah, when I was looking at stuff, I was trying to find something that could establish long-term clients where we can generate referrals because of how well we take care of them. And that's kind of where this product fit in. It's like, okay, how can we provide more value to these clients than just giving them a mortgage, right? We want to help them overall. We want to help them generate wealth. We want to help them, get themselves on the right financial trajectory. And so, because some people don't have that guidance. And so people that can, get that guidance in their life, it helps them a lot and catapults them in the right direction. And that's why it's called the art of homeownership.
Great tool. I mean,
It's like an educational.
It's an educational
Is
thing.
it a video series or?
No, it's us talking to them. I do
it's-
one yearly financial overview per year. We talk about what their goals, how they want to build wealth through real estate, more purchases they want to buy, investments, things like that, getting over to financial advisors, certain life insurance people, just kind of taking a broad look at everything and having that one-on-one talk with them.
Right.
we have those referral partners built in, and it's not a commission relationship where we're financially benefiting from anything. This is purely, hey, go see our financial planner, go see our CPA, go see our life insurance agent. You just purchased a $500,000 house, and you have $90,000 of life insurance through your key.
Right.
You need to build that out a little bit. So it's a great tool.
That is good. Yeah, and tax planning too. Something that we just implemented in our own personal lives. It's like that's a lot of money that everybody, regardless of how much you make, you're paying a lot in taxes.
Mm-hmm.
And the tax code is written in such a way that they incentivize you to spend money in certain ways.
Mm-hmm.
And I think that it just requires a little bit of education on where to put that money. Because there's no tax benefit to buying stocks.
Yeah.
None at all.
Yeah, that's very true.
But there is a lot in real estate.
Yep, there is a ton.
There absolutely.
Actually, my CPA was talking to me. He's like, "You should consider buying a farm next year." Yeah, farm, really? Okay, I'll take a look into it. If you buy a farm for, let's say, $1.5 million, and you have an $800,000 loan or something of that nature, it's like an $800,000 write-off, bro. It's a huge
And you can
write-off.
depreciate your crops too.
Yeah, I mean, there's
Which is
so much
amazing.
that you can do with that, and that's why you see a lot of these guys here in the valley. They have other businesses, but they buy farms.
Yeah.
It's for the tax benefits and the tax write-offs that you're getting. It's not how much you make; it's how much you keep.
Mm-hmm.
So,
Yeah, it's like you can buy an asset, and instead of giving all this money to the government, you can take that money and buy an asset, which is going to give you more money the next year.
Yep, exactly.
And that's how these billionaires become billionaires. Because they're not just giving their money to the government.
Yeah, they know they invest in constantly, and like you're mentioning, having the right people to talk to.
It's a financial
Right,
team.
financial team. Yeah, right. CPA. Because some CPAs don't know all the ways to basically help you out, whereas some of these other CPAs, they'll give you all the tricks basically. So
Well, and I have a CPA and I have a tax advisor. Because my CPA knows a lot about taxes, but sometimes you need a second set of eyes that are really evaluating, hey, is there any other avenue that we can explore that would reduce my taxes? Or maybe we could maybe we can structure a situation where the government owes me money, right? Turn it around, roll it to the next year, because you never know if you're going to end up paying it the year after that, and then you need a bookkeeper.
Mm-hmm.
I mean, that's super clutch because your tax advisor and your accountant can't do much unless you have accurate bookkeeping.
That's it.
Right? And then you have to have financial advisor, a realtor, a banker.
Yep.
Right? It's a team that works together to grow your wealth.
It is, and that's what we've implemented on the back end of everything that we close. All of our clients receive that, and we think it's invaluable. So often the lender will give them a quarterly newsletter with an apple pie recipe or something like that, and we just didn't see the value in that. We wanted to really help.
Yeah. So have you guys seen any change in the market with the agents that you're working with? Have you seen any change in 2021, or has it slowed down at all?
Yeah, I think in this time of year it always slows down a tiny bit. We're still busy and we're still streaming along. Definitely busier than last year this time of year, and definitely busy moving into 2022 because we want to set that year strong. Get January nice and solid. But overall, I mean, it hasn't been too bad. It seems like offers are getting accepted pretty frequently, more so than they were in the middle of this year.
Yeah.
And we're getting a few new clients every single day. So
yeah.
Yeah.
How much over ask price are you seeing buyers needing to go to get their offer accepted?
It's still there, that's for sure. Maybe 5 to 10.
I'd say it's probably pretty good. Sometimes it's 20, but most of the time.
Yeah.
And sometimes I've even seen people just come in at full price and get accepted now.
Yeah, that's happening every once.
Yeah, now that's not going to be your beautiful home out here in Clovis that everybody wants with a pool and the whole thing.
Right.
But if it's a home that's still in a really nice area and it's a nice home, but not as many people are interested.
But maybe
in
dated a little bit.
Dated a little bit. Yeah, exactly. Those homes are probably going to be less competitive.
Right.
But yeah, we're seeing purchases come in almost every day. Still, it's strong, man. This market's strong, and I don't think it's going anywhere anytime soon. Personally,
what percentage of your business would you say is like refinance based?
not very much. 70 to 80% is purchase. Got it. 20 to 30% is refi. Even last year, in the biggest refi boom of all time, when other lenders and loan officers were focused on doing refis, we were still at like 65% purchase.
Wow.
So we were still doing the majority purchase. The truth of it is I just don't have that big of a book of business yet because I've only been doing this for 4 years. So I can't just go into this huge database of clients and refi and help them get lower rates and all that kind of stuff. I had a few of those, but I didn't have that, right? So the veterans that have been in the industry for 10, 15 years, they have this giant book of business that they can just go in and say, hey, it's time to refi, the rates are lower.
Mm-hmm. It's more critical to us to build a relationship with realtors. Honestly, that's the sustained business.
Yeah.
Building those really good, close relationships with our realtor partners that's the priority.
And figuring out how we can provide value. How can we be better? How can we improve our process? How can we improve our systems? And that's where, I feel like a lot of people can, if they focused on that, their businesses would expand on a bigger level. Right?
Mm-hmm.
So, giver's gain.
Yeah. Are you guys seeing people do like second mortgages, where they're pulling out all the equity in their house, or are banks even allowing that?
Oh, yeah. You can cash out up to 80% on a primary.
What about are there some, because like in 2008 during the bust, people literally pulled all their equity out of the house. Like, is that even allowed anymore?
You can't do that anymore. There's some VA lenders that will actually do 100% cash out.
Yep.
But like conventional FHAs, no, they're not really going to do that unless you go non-QM. Then your rate's way higher. Yeah. But we're not seeing that very often, man. I'd say, most of the loans that go in are strong, conventional FHA loans that, are not going to have any issues.
So you're not seeing first and seconds?
No, not really.
Well, like a first, you mean like a second on the back? We
like not jumbos.
Yeah.
But let's call it a $500,000 house where there's, I don't know.
Yeah.
How did they? I mean, this was before I was even in real estate. So it was like, okay, they bought the house at $300,000. They were paying it down, so then their balance was like $220,000, right? But then the value was at $500,000, so they got a secondary mortgage to pull all the equity back out.
Right.
So I mean, is she in that?
More of what we see, we don't see a lot of that's the home equity line of credit. We don't see a lot of HELOCs. We see more just cash out refis.
Mm-hmm.
So they're just taking that loan to value. So so in your scenario, you were at 50% loan to value or 30% loan to value.
Yeah.
They're taking it back up to 80 and taking that cash out
I see.
for whatever.
Right.
I think in your analogy, if rates go back to ones, we'll see a lot more refis on your database.
That would be crazy.
But yeah, there's not a lot of cash out right now, and that's a great point too, because Nathan, there's a lot of equity over the last 2 years, right?
Yeah.
A lot of opportunity to take cash out. And what's interesting, there were a ton of people taking cash out back in 06, 05, right? Remember when that big shut?
Yeah.
But people aren't really doing it right now.
Yeah. They realize
Yeah,
that we are built on a house of cards.
they lived through it, right?
Yeah,
Over there.
they're like, wow, I can't believe the government printed how many trillions last year?
Yeah.
Build all the things.
Yeah.
So,
So, but I mean, because they said over the last like 18 months, more money has been printed, created out of thin air than ever in history combined.
Yeah.
That seems a little scary.
That's a little crazy.
It's like you're just flood the market with more money that just devalues everything.
it really does. It sets it up for.
And it makes the richer richer and the poorer poorer.
Mm-hmm.
And yet it's supposed to help the poor,
Right.
but in the long term it hurts them.
And it's killing the middle class too.
Yeah, right. The
Like,
divide.
exactly. The divide's getting worse and worse, and inflation is going up and up and up. So yeah, you got to have your money working for you. Absolutely.
Right.
It's got to be in something to, beat this inflation.
Right.
Great.
Cash flow. And buying real estate, you ride the what do you call it? Inflation. You ride the inflation wave up.
Mm-hmm.
So it actually is working to your advantage, or at least it's, offsetting the disadvantage of inflation.
Yep. Exactly.
Yeah. But cash flow is where you find freedom, right?
Yeah.
So true. So true.
If you like this video, please like it and subscribe to our channel for more content. To watch another similar video to this one, click here and I'll see you on the other side.